And hello. Welcome once again to Vishal and Company. We are the four musketeers at this point. Maddie is otherwise occupied, but she'll be here next week. I'm just trying to find here what we're talking about today. There we go. I got it. Basically, even though I'm well aware of it, I need things written in front of me. The stock markets are diving.
A lot of charts today, Galen.
Is the bull market over? That's the big question. Silver is, it's shining. Look at that thing go.
Safe haven.
Yeah, absolutely. We've also got major moves in both oil and Bitcoin going in the opposite directions. But yeah, there's movement. And then Netflix poops the bed. So, Vishal, take it all over, man.
A lot to talk about here, boys. A lot of charts here, big moves in the charts. I'm starting here with the S&P 500, which is in front of me. And we've been talking about my major channel trend line here for some time. This week, we actually closed below that trend line. We broke below it. If you're part of our Discord channel, heck, if you get our newsletters as well, I did warn about, hey folks, this is not looking good because the S&P 500 and the Nasdaq have actually officially broken below this channel uptrend, which again, you don't have to be a professional technical analyst to see that if the trend is like this, that's the uptrend, and if you break that uptrend, you're probably gonna sink. And that's happened these past few days here. The markets try to recover, and you see this all the time in breakouts and breakdowns, where usually you see price sort of retrace or pull back up to the previous break, in this case, the breakdown zone. And the sellers piled in, and today, Friday, while we're recording, the same thing happened. We had a breakdown confirmed yesterday. Today, the markets were green for a bit, pulled back to retest that breakdown zone, and we sold off. And unfortunately, folks, I'm looking at 44, maybe there's 4,400s right pretty much here, but maybe even 4,300 here on the S&P 500. And there could even be, I was hoping we were going to get a dead cat bounce today with a green candle, but it's not looking like that. But, we've had we're going to get 4 straight days here in red. And as we're recording this, the markets are actually making new lows for the day. Same thing here with the Nasdaq, although the Nasdaq here is at a major support zone, but we'll talk about a few of the tech companies and why they're getting, smashed right now. And the Dow as well, big support zone coming up. The one I'm actually worried a bit most about is the Russell 2000, which is the US small caps, because it's held this range here since March of 2021. And you can see there's actually quite a lot of downside for it. I'm worried about the Russell, I have to be honest. And a lot of people are wondering, why is this happening? Is it because of obviously the rate hike here in March? It looks like here now, wow, it's actually dropped a little bit because the hike percentage was.
Vishal, you're dispensing such awesome knowledge right now, but I think your streaming of your screen has frozen. Unfortunately, we're looking at Mr. Jinping warning the Fed against jumping interest rates.
Oh man, I was just about to talk about that. Okay, should I just try to close the stream and restream it? See what happens?
Sure. Why not? What the hell?
And then we can return to the breakdown of the breakdowns.
Yeah.
Okay.
Sorry, my friend. I'm looking at different things, and there you are.
How's this?
That's perfect.
Okay, better.
We're doing the breakdown of the breakdown.
Oh,
break it down.
Somebody needs to mute themselves.
That was me.
Yeah, so that's the breakdowns. I guess it wasn't live. I'll have to talk about that again. But the channel trend lines here, I'll just quickly go back and recap here. But this channel trend line that we broke on the S&P and the Nasdaq basically clearly confirms that this uptrend is over, and we've had that breakdown and 4 straight days of red on the S&P 500. We've had retests or pullbacks up to those breakdown zones, which also have seen sellers pile back in. And today, I was personally hoping we'd get a dead cat bounce today. It looked good with the green candle, like we were actually green at one point today. But as you can see, the sellers piled back in on that breakdown zone. And we're making new lows for the day. I'm still thinking we can maybe hit 4,300 on the S&P 500. Still some room to go there. The Nasdaq actually here is at a major support, so we'll see what happens going forward. And the Russell is the one that I'm a bit worried about here, or the U.S. small cap. So, we're talking about cannabis, I guess, and a few other small cap companies in the States there. But we've broken this range that's been holding since March of 2021. Looks like a lot of room to the downside. And
what's the VIX like right now?
yeah, so the VIX is probably, there she goes. So the VIX is definitely showing some volatility here. Let's see if we can take out the highs that we saw in early December. But a lot of people wondering, why is this happening? What's going on? I wanted to show you guys the Fed rate hike here. March, we're expecting a 25 basis point hike. This actually was 97% just a few days ago. Now it's dropped down to 89.7. And, we've had this debate here on the show many times about, can the Fed even hike? I think they have to hike pretty much once here in March. But again, it's still a long way from now till March. Anything can happen. This probability can decrease if certain things happen in the economy or in the world. But the big question I think that's weighing in on the markets is the Fed going to be hiking 4 or 5 or 3 or 4 times this year? And I think that's why the markets are a bit fearful right now, or that's what the media maybe is telling you what the market's fearful of. I actually think the markets are a bit more fearful of the geopolitics side, just because of the price action I've been seeing in other markets, which we'll cover in just a minute here. But funnily enough, like yesterday and today, the whole market's been talking about, the markets are, the media, has been talking about the markets are afraid of rate hikes. And then yesterday, we had Xi Jinping saying, hey, please don't hike, don't raise interest rates by 25 basis points. He said that to the Federal Reserve. This was the Davos meeting, which happened online this year.
Which is basically, which is basically an admission by the Chinese government that their economy is shit. And that if we jump our basis points, they're screwed. Now, that will lend itself on into a global economic downturn.
So what the Chinese are complaining about is that basically if the Americans start raising their rates, it's not going to be good for countries with US dollar denominated debt. But just like you said, Galen, it's more likely that the Chinese are having issues with, say, real estate. And some of the real estate firms. And remember, the Chinese did cut interest rates by 10 basis points. I believe it was this Monday. Mm-hmm. So sort of completely opposite of the whole central bank of idea of, we're going to start raising interest rates. So keep an eye out on this, because I think from now till March, and again, that's sort of been my base case scenario here, that the markets are literally propped up here on cheap money. They have to get the cheap money going again, right? So this might be a way to sort of save face for the Fed to sort of maintain confidence by saying, hey, we wanted to raise rates, but then this, and this happened, and it's not our fault. It's this, and this, it's that fault, right? So they're sort of in a way maintaining confidence.
The thing is that in the end, it's not going to help us at all if they fucking lower rates. Exactly. It'll be packing more dynamite into the fucking bomb. Yeah. So it's just, we need to let this thing go. It's a horrible fucking mess. We've overinflated the markets to a point where it's actually embarrassing. It's got to normalize, and it's going to be fucking painful. But the problem is that if we don't do it now and we give it another fucking 3 years, it's going to capsize everything. Sorry to be chicken little, but holy shit!
Sorry, folks.
It's needed.
But I really got to say this. It's the first time I've actually seen the comparison between Xi Jinping and Winnie the Pooh. I mean, doesn't he look like he's looking around for his honey pot right now?
Joseph, I'll send you this video, because there's a great YouTube video that's I think it's trending right now. It's only 10 seconds, but basically some guy in Japan cosplayed as Winnie the Pooh, but he looks exactly like Xi Jinping, and he hired basically, or his buddies are these 10 or 12 guys in suits as bodyguards, and he's just walking down a street in Tokyo, and all these cosplayers are taking pictures, and all the security is trying to keep you away from Winnie the Pooh that actually looks like Xi Jinping. It's the greatest cosplay ever, man. But today, the trending article now here on CNBC is now not just Xi Jinping, but now the IMF chief is saying a Fed rate hike here is not really a good thing, because we haven't had a global recovery right now. So It's a bit crazy here, folks, because a lot of us contrarians have been saying that, okay, sure, the Fed wants to raise rates, but I don't even know if they can do 25 basis points. And now you're seeing all these articles come out saying, oh, the Fed shouldn't even hike because of this and this and that. And I'm just saying there's a lot of time from now till March for the Fed to change its mind, and we're already seeing a bit of a drop in the probability, but it's definitely crazy. And
well, that's not necessarily probability. That's people's feelings about what they
Yeah.
think they're going to see. So it's not actually probability; it's expectations.
Yeah. But generally, if it's usually quite high, the Fed would have to do it because
Well, of course, but I mean, still,
They don't
even
wanna
if
dis-
even if it isn't popular, they still have to weigh that against the economic impact of what they were doing.
exactly.
They only have a very
To start
few
with.
tools at this point, and they've overused them. It's
Yeah,
I mean, I wish I had better words to describe
Yeah.
it, but it's a shit show.
No,
it
that's
is.
true.
Yeah,
And
Yeah.
so I think you can kind of notice as well, a lot
Yeah.
of the earnings calls, a lot of the CEOs are kind of mentioning and dropping the same thing, even not earnings calls alone. But I know a couple months back, I think November or December, somewhere there, Elon was at some conference, a video call. And Elon Musk, by the way, just in case people don't know who we're talking about.
Have you heard of Elon Musk? Have you heard of Elon? I'll show you.
Elon Musk, the chief
Okay.
executive of Tesla. He was talking about the infrastructure bill.
Oh, there's supposed
And
to
he
be
was,
Elon.
they asked him, obviously, because he's a policymaker. They asked him this question during the interview that, oh, this kind of stuff is coming out because people are printing a lot of cash and there's need for more cash injection. What do you think? And he echoed what I think most CEOs and hedge fund guys are kind of echoing right now, that you can't have expenses higher than your revenues for a prolonged period of time.
Geez, if he only applied that to his own company.
Yeah, that was the that was the ironic part. I was like, oh wow. So you do know how a profitable business.
Yeah.
Crazy stuff.
But yeah, he was like, whatever decisions the government makes now is because the Fed has kind of put their back against the wall. So the government kind of has to continue to consume more than it produces tax revenue wise. Because if it touches any of its, like what Galen is alluding to, if it touches any of its tools, the government, not even the Fed in this situation, it also has the same ripple effect, but not only to the market, that one actually directly affects people,
The
Population.
real economy.
the actual fund, the economy. So they're kind of both. Usually it's not like this. One usually has the tools to do something,
Mhm.
and the other one just sits and waits for the situation to change. But in
Yeah.
a situation where both of them are just their
Yeah,
backs
exactly.
against the wall. So it's yeah, like as Vishal said, it's an interesting situation because usually there's always a scapegoat or someone bashing the other person. But what's happened now is external parties are now bashing the US, saying you've all put yourself in a terrible situation and you don't have much to do.
Yep.
So you just kind of have to wait, and hopefully you get negative interest rates like all of us, and
Yep.
just join the party.
And that's we've talked about this in the past about like the US dollar chart. There's always that debate against what's going to be that best fiat currency. I'm still part of that dollar milkshake crew where I think money's going to run to the dollar for safety, and it's going to be bad, right? Because a stronger dollar is going to be basically what Xi Jinping's warning about, right? All these dollar-denominated debt countries are going to be in trouble. Turkey's example, but there's a few other countries out there. So if we see money run into the dollar, it might cause this case where countries around the world might demand another Plaza Accord, right? Where back in the 80s, they're going to say, hey, the dollar is way too strong. We have to get together and you have to weaken it. The Americans devalued the dollar back in the 80s. The Japanese were pissed because it meant their yen had to strengthen when they were an exporting economy at the time. So it messed up Japan big time, right? And something like that is maybe going to come down the road here. And you just have to wonder if maybe other nations might be looking up to, like China to be more of that, hey, maybe you should lead the effort into sort of calming the U.S. down here. And it's something Ray Dalio talks about a lot in his, Thucydides trap book here between the U.S. and China. But let's quickly here, just because I know we want to talk about cryptos and stuff, let me just quickly here talk about metals. A lot of us metal bulls, I know, Galen, we were celebrating on our
Loving that
investor
silver.
roundtables here.
Loving that
But,
silver.
and silver was amazing because on one day, everything was selling off. Gold was even selling off, but silver was acting like the true safe haven that day. And it was this day that was on the 18th of January, because I remember this breakout. Silver closed. I think it's been like it's a 6% move in like 3 days here. Major breakout here. We've been talking about this huge support at $22 here. But the metals are looking good. Gold is now even catching a bit. Obviously, a lot of the metals are pulling back today, but I think the metals are looking quite healthy here. And a lot of people are wondering, is this still the inflation trade? Because generally, if you're expecting rates to go higher, the metals should be dropping, because since gold yields nothing, and if you expect interest rates to rise, why would you hold gold? So is this the market pricing in higher inflation that even the Fed won't be able to deal with, even if they raise interest rates? Or is this, like a confidence geopolitical crisis type thing where you want to hide your money into something that's safe?
Now, I have a question from one of our viewers, from Vix. In fact, it's a rather apropos name. Any thoughts on why U.S. dollar, Canadian dollar keeps plummeting?
Yep. So U.S. CAD is obviously the Canadian dollar is very highly correlated with oil. And it's actually a good segue here, because we will talk about the oil charts. Oil actually did take out the highs of 2021, which was back in October here. We broke out into new highs here in January. And look at that, we're actually retesting the breakout zone. And the thing about oil, I know, Galen, we've talked about this, there's a lot of room to the upside, folks. I think we're going to be talking about $90 oil very soon, possibly $100 oil by the end of this year. I actually think it might happen very quickly, maybe in the next 3 months. And generally, I mean, I don't know if this is an economic growth thing, because obviously China cuts rates and all that kind of stuff. So I'm thinking this might be more to do with the geopolitics side of things, with obviously Russia and Ukraine. But yeah, if we look at the US CAD, we had a head and shoulder reversal pattern here on my daily chart. We broke down, I actually personally shorted this on January 11th. And usually the Canadian dollar, the Norwegian krona, and the Russian ruble are heavily correlated with the price of oil. So if oil will move up or breaks out, the loonie, the ruble, and the Norwegian krona will follow. So that's what you have to definitely keep an eye out on if you're a trader of the Canadian dollar, or the loonie. Sorry, you have to keep an eye out there on oil. So oil's breaking out, right? Oil looks like it's breaking out. Today we're doing that retest, and higher oil prices means more expensive fuel, I guess, right? But also it's going to
and higher food prices.
Exactly, right? Transport costs, which increases the prices of food, which is going to increase the inflation rate, which, markets are going to expect the Fed will have to raise rates.
Yeah, it's good news. It's good news for oil and gas investors and the resources sector in general.
Yeah.
And then in a certain ways, after that, however, it's almost a sign of shit's about to get real. We're going to start paying a lot for our food. We're going to start paying a lot for anything that has to go on the road and travel anywhere.
Exactly.
That's true.
Yeah. So it brings an interesting point, because maybe this is also tied in why silver and gold are going up, which are generally the best ways. Not necessarily, I don't want to say silver and gold is the best way to make money per se, because, a world where gold is $12,000 and silver is $500 is not really a world you want to live in, because right?
There's a tremendous disconnect between the values of both those metals. Gold just has its reputation. But unfortunately, it's at such a stratospheric level, it loses its common use, meaning that if I wanted to invest in it or have it or possess it, which is what I really suggest over anything else, I can't really go to a store and buy anything with it. I'd be shaving off little, things, and we'd have to weigh it and, toss back and forth how valuable it is. But with silver, literally, you can go buy an ingot and then go take it down and do a transaction with it, because it's readily exchangeable. And on top of that, it's a highly functional metal, meaning that it has great importance for what we're actually about to enter into, which is the alternative energy age. And, for solar panels, for anything that we're doing, the electronics. Silver has been artificially suppressed. Thanks, J.P. Morgan, you fucking assholes. It's artificially suppressed for quite some time. And honestly, its true value has never been realized. And I think we're heading into that. And if you're wanting to be somewhat of not a conspiracy theorist, but someone that is like me who doesn't really believe much in the way society is heading, if you're looking for a general breakdown of community structure and such, it's best to have something you can walk around with in your pocket that you can spend.
That's true.
I know, Galen. What about Bitcoin, man? Would you want to be?
I wouldn't
holding...
go anywhere fucking near it.
That was going to be my segue there. But here's a chart of Bitcoin. I just wanted to show you guys major support zone here, 40K breaking. I was hoping we'd get some sort of double bottom pattern here, but another reason why, folks, it's important to be patient, to wait for the breakouts, because you don't want to be someone like this where you think it's going to happen and then they basically take you out the other way. And I'm sure a lot of stop losses here under 39,585 were taken out, which is leading to this breakdown here. But yeah, it's looking like Bitcoin will confirm this breakout unless magically we turn this around and reverse and close back above 40K. But I don't think that's going to happen. And, some people are here looking at 36K. Personally, I'm looking a bit lower at maybe the 32K level here. But yeah, a lot of debate here on Twitter saying, hey, why is Bitcoin not acting like that safe haven or risk off asset? And I've always maintained, right now, Bitcoin is acting like a risk on asset where it's heavily correlated with, or highly correlated with, the stock market. So wherever the stock market goes or moves, Bitcoin and most cryptos will do the same here. But any thoughts from anyone here?
Joseph, I'll say something, of course, because I've always been leaning that way. But I would like you to respond to it. My idea is that Bitcoin is, as we see it right now, it's an asset, not a currency. It doesn't have any other functional use, and mostly it has just been something people have been investing in. But what they're beginning to realize, I think, at least at this point, is that it's not something that you can take with you. If it's an agreed upon value, meaning I can't go to the store basically and buy with a Bitcoin if everything falls to shit. I can, however, go to a store and hand them, again, to beat an old point, a chunk of silver, and that's a pretty well transactionable item. I can take that anywhere and use it, but Bitcoin really depends on whether you and I agree on its value.
Well, yeah, I would think that would be demonstrated true. Now, Bitcoin itself was actually meant, upon inception, to be a form of cash. But unfortunately, the way the market's traded it since inception, and it hasn't really gone that direction. There are a lot of developers out there who are trying to put, trying to basically work second layer aspects onto Bitcoin to make it more fungible, so it can be used as cash. But I think we're about 6 months to a year before that happens. And quite frankly, I would actually be looking towards different coins as sources of cash. Like one of my growing problems with Bitcoin, and in fact a lot of the standard coins, which you'll see, is that they're completely transparent, which means that you can see everything that goes on in the blockchain, which means that you have no privacy. What I think we're entering into is, of course, an age where privacy becomes a lot more important.
Right.
So I'm starting to look towards more privacy coins, more privacy-centered stable coins, for example, as potential stores of places to put wealth, especially if they sit at a 1-to-1 ratio.
Yeah.
Bitcoin itself, well, I'm still holding on to it. I'm right now we are 1 year away from the next halving. I think it's 2023, and it's still historically follows the same patterns it did last time. Like it really does. I mean, we saw a massive drop off. People suddenly stopped paying attention to it. They don't care as much, and then the hype surrounding the halving picks up, and we start seeing the small bounces, and then 6 months to a year after, we hit new all-time highs. I mean, that seems to be the pattern. I mean, you can't necessarily look at historical data and say that's what's going to happen, but that's what happened with previous happenings. I mean, it's reasonable to assume.
Those are good
But
points. Absolutely. I'm still stuck on the idea, and well, we got a viewer back. I was wondering if my comments drove everyone away. My idea is that it can't, or it can act as a currency, but in that respect, it is a solution in search of a problem, because the problem isn't the currency. I mean, you can say, yeah, they print all the money they want. You just make another fucking cryptocurrency. Doesn't matter. It's as mutable as any other device that you actually put out there, right? It's not something that, it's not what we try to pretend it to be. The problem with the economy is the economy itself. It's not how we pay each other. It's how that whole paying system comes into being in the first place. So I really think that we need to focus on the problems at hand rather than go, you know what, let's just switch masters. Let's just not have the Fed involved anymore, but we'll give it to a bunch of other people that have that awesome control. Now, I would be more inclined to be in a world of hash graph, because that's truly democratized, right? Where it's on every fucking phone. There's no majority computation on any country or any other place. Everybody is equally involved. It requires no computing power, so we're not drawing, a country's worth of fucking electricity every year just to produce the coinage, right?
Yeah.
And for me, it needs to be functional. I don't want just a fucking currency. I want the blockchain. That's where the value is for me.
Bitcoin is the old dog, right? It's the one. It's the one that hasn't quite gone out of style yet. It is the, I don't know, what's the appropriate term for it? It's the progenitor. It's the very first one, the one that everyone knows about.
Yeah.
Whereas there are different blockchains, different consensus mechanisms, and they're being invented every day. Some of them, honestly, most of them are better than Bitcoin in terms of efficiency, but they just don't have the market sentiment behind them. That's the reason why Bitcoin goes up and down. It's literally just market sentiment.
You know what I'm interested in? Remember how El Salvador basically made Bitcoin legal tender? I wonder what's going on there, like in these past few days here with the sell-off, how things are going on.
I wonder if they set them on fire yet.
On voluntary inflation.
You're right, yeah. Let's keep an eye out on that, because I think that might be an interesting sort of case study. Just to
What was the country that said they weren't going to do asset or capital gains taxes?
That weren't, or
Costa Rica? No,
Puerto Rico?
Yeah, Puerto Rico.
Puerto Rico.
Its economy is now being ruined by fucking Bitcoin millionaires, by the way.
There's a whole bunch of them there.
Yeah.
But the ironic thing is Peter Schiff is there.
Yeah. So I mean, I don't get the whole sort of altruistic idea of this either, that it's somehow going to lift us all out of poverty, because it isn't. It's just another mechanism of control. Now, of course, I've made everybody else leave with my comments, so maybe I should just shut the fuck up and let you guys talk, so people would be, enjoy the conversation more.
I think I also lean on your side of not sure where this is going, but I think it's hard for the 3 trillion in market cap, whatever it's at now, in the crypto space, to disappear. The big question is, where does that excess cash that these millionaires are going to go? And that's what I'm looking into now. And kind of what you're alluding to, Galen. No matter what system comes through, we're going to be transacting basically the same. There's going to be a counterparty. There's going to be a receiver and someone sending off. So I'm like, yeah, banks are the old guard. Their moat is not as big as they were before. Their competitive advantage is not growing, but it's also not shrinking as fast as the Bitcoin crowd thinks. So I'm like, whatever system we're going to be in, they're going to be heavily involved in whatever comes through from the technology happening now. So, but I'm not saying go out there and buy the banks. It's not what I'm saying, but it's more like, for example, to take an economy that I think has progressed a little more on the tech side. If you look at a lot of the transaction bases in China, they are more advanced than the US. Canada is more advanced than the US when it comes to transactions. Uh, and they have completely discounted the crypto space. I don't know if that's a CCP play or Alipay and WeChat Pay, and the banks are part of that choice. But it's a telling thing when the second largest economy in the world is like, yeah, we get what you're talking about. We'll make our own little thing, but we're discounting everything else that's going on there. Their actual motives are never really clear, so you kind of have to wait and see what happens. But I think that's a pretty, it's kind of like the signal is more important than the actual reason, and they've obviously signaled big, and I take that as okay. I'll still look at companies the same way I did before, just realizing that some of them are not going to be as competitive as they were before. So companies like Visa are not going to disappear. They're going to be around, just in a different system of whatever we're going to be getting into. And that's kind of where I'm at now. And I'm like, I think most people eventually will start thinking along those lines. I hope, because I like having my tangible card. I like having my cash. It just makes me feel safer.
So TK, what's your thought here then on the tech sector and growth right now? Because I know a lot of people want to hear, a much more professional.
No, I'm not actually making this up, but this last 2 weeks, I've gotten a dozen emails and texts asking, should I sell everything? And same answer to most people is, first thing off, okay, since you're selling now, you obviously didn't know what you were buying initially. so it's a telling point. But I think what the market is doing now, it's kind of recorrecting a previous incorrect assessment of what the future earning power for a lot of these growth companies is. I won't call it a correction, like in the standard term. I think the correction is like a 10% down or something like that. But it is incorrecting something that it previously just judged wrong. The best case I saw, what we're going to talk about today, was Netflix, where the company is still fundamentally strong. It's just growth has slowed down quicker than people thought it was going to. And isn't that part of a growing business? You can grow from $1 billion to 10 pretty quickly, pretty smoothly. But going from 10 to 20 is even more difficult. But you still went to 10 to 20. It's still good. And that's kind of what the CEO, the post saying on their earnings releases. The growth is still there. It's just we're bigger now, so our base is a little harder to grow from. And people are focusing more on the growth in active users or active viewers.
Right.
They're saying we've actually made efficiencies that improve our retention rate and our churn, so they don't lose as many customers as before. So I think they're still good. It's just people now reassessing that growth aspect. They're reanalyzing how much growth is actually baked into a lot of these stocks. There is one. I don't want to jump on Galen's horse here, but with Tesla, I've reassessed that as well. I think a lot of the price action in Tesla is mostly baked in from everything else around it that has nothing to do with it. So there's this guy, he gave an example that if you look at Tesla and you apply Cathie Woods' 50% growth for the next 10 years or whatever she has for a $3,000 stock, that means at the same scale as Tesla is trading now, it would have to be at around 52 times, next year's earnings, something like that. So basically, for each dollar you're paying for each dollar in earnings, you're paying $52. Right now, it's I think 600 or 1,000 between there. You have to pay $1,000 for $1 in earnings, and he's like, the rest of that profitability that you're paying for is the space travel and the Bitcoin stuff, and he's like, that's what you're paying for. So if you believe in all that, today's price for Tesla is right. And I was like, you know what? Yeah. If I believe that Bitcoin is the future and Elon is going to make us go to Mars and Tesla's going to go to 50%, today's price is right. So I've changed my opinion.
Dogecoin, not Bitcoin.
Sorry, Dogecoin. So I want to be on the record and say today Tesla is cheap. if everything that is expected to happen is going to be perfect in the next 10 years. That
Now,
is my opinion.
I am going to push you off the horse and basically say that, yeah, sure. We can all say that, fuck, it's worthy of trading at 100 to 1. That's an absolute fucking tripe bullshit. He's pushed the EV market. The EV market was already set up and ready to go. Tesla was already a thing before he stepped in. Yeah, sure, he became a face and he touted it all around. Oh, he's the leader of the EV revolution. You know what? That deserves a fucking attaboy and a pat on the back. Maybe a plaque. Not a fucking 25 to 1 or 50 to 1 or 314 to 1 profit profit to fucking trading value. Like, that's not it. I'm sorry. And if you believe in fucking Dogecoin, invest in Dogecoin. If you believe in space travel, invest in a fucking space travel company. Ridiculous. It's this umbrella aspect that we've given this asswipe who's got no fucking ethics, delivers shoddily assembled fucking vehicles. They have to recall 475,000 cars because of dangerous assembly issues. Your hood could fly up on you while you're driving down the fucking highway. You think that's a good thing? We should be celebrating this asshole? No, we shouldn't. It's great that he's sort of given a profile to the EV industry, but it's not to really help his competitors. He shits all over everybody else. He's not a fucking face for the industry. The guy's a fucking dickhead, and he doesn't play by any rules, right? We want to go on and say that, he was a fantastic businessman starting out of university because he ran his fucking house as a nightclub. His mother bought him that fucking house. He didn't get any permits to run that fucking nightclub. And I'm sure he didn't pay anybody anything and just kept all the money for himself. So fuck it. He's not a good businessman. He's like his father. He's an evil bastard. Sorry.
I think so.
Seriously, we need to get you a theme song and a little segment header right before you get going. So now forget this Elon Musk moment.
Here's another thing. The guy, for PR's sake, because either he's dumb as a fucking fence post. Sorry. Either he's as dumb as a fucking fence post, or he's evil as evil can be. He signs a fucking deal to get local lithium out of the United States from a company, Piedmont Lithium, that's operating in North Carolina. They couldn't even fucking get the permit or a feasibility study going. So what does he do? He goes and signs a 3-year investment deal, or 3-year supply deal with fucking Ganfeng Lithium, which is one of the world's biggest lithium suppliers. So here's the story here. As I said, he's either as dumb as shit and has decided to sign a deal with a company that obviously didn't have a clue of how to get their mind going, or he really knew what was going on and basically signed a deal that he knew that was never going to come to fruition. But he could go to the public and say, well, I tried, and then end up signing with the fucking Chinese. Yeah. Sorry, guys.
Yeah. Joe, there was onto that, I think, what's his name? Charlie Munger. In his last interview, was talking about what's the space one?
SpaceX.
SpaceX, and he was like, SpaceX. He thinks SpaceX is a better business than it's being run as a better business than Tesla, because SpaceX is private. He thinks Elon doesn't have the capabilities of running a publicly traded company.
I think that's very true.
He's not a good publicly traded company CEO.
No, he sucks.
And you know what? This is someone who calls Bitcoin turds, who's saying something on the neutral side, and he's like, and this was the jarring thing for me. He said he thinks SpaceX should have a higher valuation than
Tesla.
And SpaceX in the last private raising was 100 billion in valuation. So yeah, it tells you one of them has to be grossly overpriced. So I was like, kind of what you're saying, Ed. He makes these deals, but he knows what has to happen to come out at the end to make shareholders or whatever his board approves some of the deals that he goes through. But I don't think he has the safeguards or the corporate governance there is not great.
It's non-existent. He just does whatever the fuck he wants. He's
I
still got that $13 billion litigation against him for his less than ethical appropriation of Solar City. He did it to save his ass and his brother's ass. Had nothing to do with the company. It's not performed the way that he's finally admitted that, by the way, that it's not performed the way that it should have. It was a shitty buy. The solar industry, for the most part, especially at the time that he did it, was not a fucking investment. It was still at that point further future technology, and only now is it sort of starting to get together. But realistically, he's used Tesla as a crutch to run all these different fucking games off the side. And honestly, fucking manipulating cryptocurrency, get over it, you son of a bitch. Sorry. Yeah, I am sorry. I have no love for the guy. None.
No, I actually completely get it.
Steve's still with us, and I'm just curious.
Before I know we have to finish off soon, but it's kind of scary to watch and see, especially when people come to you and ask, what do you do now? I know someone whose portfolio is basically 40% Tesla and then bits and drabs like 500 other stocks.
That's fucking stupid. Sorry. I mean, it really is.
And I was like to him, man, you know what? You probably know way more about Tesla than I do. And if you're asking me, that's the problem. You should look at what you own and actually ask yourself, do you understand what's going on? And if you're comfortable with what I said at the beginning, Tesla is cheap today. You should buy it. It's going to grow 50%. It's going to have space travel. All that is going to happen under their umbrella. Keeping in mind that right now everything is separate. So it's not under one umbrella. But if you have that assumption that he's going to make all these pieces work together and the world is going to be a better place and we're going to have flying cars, like all that kind of stuff, make the bet. But I have a strong inclination to go on the opposite side and say, I don't understand what's going on. Tesla can go in my too hard pile and I leave it there. And if I'm wrong now, that's okay. I don't have to swing. I can just wait until something happens that I understand. And then I can come back and relook at it and say, was I wrong and why was I wrong? What did I miss? Is this guy actually the genius he said he was, if he's not in jail at the time? And I'm like, okay, you know what? He had a point and I might buy the stock now. That's kind of where I'm at now. I'm like, it's obviously too hard for me. If you understand it, go ahead and buy more with 50% of your portfolio in it.
Considering what you said, I'm going to give the guy one break.
Yeah.
Recently, no, not because of that other shit, because he still stinks to high heaven about that.
Okay.
But recently, Neuralink, he made an announcement in regards to clinical trials that they're starting to commence with using the chips in humans in order so they can access their electronic devices and stuff. And realistically, for me, there's all sorts of other ways that they can do that without jamming a fucking chip in their head. He's using them like guinea pigs. But basically, when they asked him about the future use of this, he didn't pull one of his fucking bullshit hyperbole answers and actually said, you know what? It's probably going to be a long time before we get people, because they were asking about mobility, before we can actually get people to use this as helping them walk and stuff. It's going to be a long time, which completely defeats the promise that he made that we're going to be talking to each other telepathically in the next 5 fucking years. Language has got to be one of the most difficult fucking things to parse, and he figures that we're going to be doing electronically. Bullshit. So it's at least at this point, he managed to pull back his statement, right? I'll give him that credit. But honestly, for everything else, man, he is just fucking a danger. He really is. Like, the public markets are for the worse because of his involvement.
Speaking of a danger, I really want one of his flamethrowers. Do you know if he's making it anymore?
No, I think they're all sold out, man. That was all.
You can probably still buy. You can probably still buy the hot pants though.
Yeah, true.
I'm not sure I really want Elon Musk hot pants. It just sounds unsavory.
On the brighter side, on the capital markets, Activision and Microsoft announcing a big merger this week. Sorry for that. This week, 70 billion valuation on a company that generates, I think, billions. I'll say, I'm not too sure. The deal is supposed to go through at the end of 2023. So it's a one year deal, etc. And I'm looking at this and I'm like, yeah, it's a company that has over $150 billion in cash sitting in their books, Microsoft. And here they are making acquisitions that I think are pretty, smart. I think they're overpaying, but if you're paying for a brand that holds, COD, etc., Call of Duty, and World of Warcraft, you're probably going to do well over time. So this is how I look at their deal. These guys, Microsoft makes like $60 billion in cash a year at this point. They were like, let's forego 1 year of cash so we can acquire this asset that brings in whatever amount of cash going through. That for me is good capital allocation. That's a good CEO. And I like the Microsoft CEO. And so I look at that and I look at the other side of what's happening with the shit coins. And I'm like, I like this. Let me look at this. I can understand this. And that's a good deal. It's not all shitstorms right now in the market. There's actually stuff that's going on that's pretty profitable for a lot of people. So that's on the brighter side of the market this week. I think it was this week that deal came out.
You were mentioning that people were asking you where now, what they should do now. I think they should get the fuck out of meme stocks and start looking for real value and real potential, meaning food companies, ones that are going to be helping us eat over the next fucking 20 years. Water companies, the ones, because that's going to be the next big fucking war. Go into infrastructure, the thing that keeps us alive, the unsexy stocks. Growth is organic, it's not sexy, and it doesn't happen overnight. Real growth, right? The stuff that's going to collapse in 2 days, that shit happens overnight for sure. But the stuff that's going to keep you going, like gold, for instance, over the 20-year period is a 500% rise. I mean, that's a good investment, but it's one that you make and fucking walk away from. Don't be trading it on a daily basis, right? We really start have to look at that. It's not necessarily pleasant or pretty, but it's real, and I think it's necessary. And I just made everybody fucking leave the channel. Look at me go. I am a nasty motherfucker. All right.
Guess we'll wrap it up there then.
All right.
We've been,
Thanks very much for showing up and listening to the show. We enjoyed it. I know that I did. And I probably made a lot of people really pissed off and angry. But, that was redundant. Joseph, great stuff on the Bitcoin. I know I'm your biggest adversary, but you do well and have good points. Vishal, breakdown of the markets, unbelievable. Thank you so much. Parses apart a real confusing situation. And TK, your fundamental analysis is second to none, brother. All right.
Thank you.
I'll take care, or you'll take care. We'll all take care, hopefully. We'll see you next week on the next Vishal and Company. All right. Thank you, Thunderbird, for the Aqua Bounty for land-based salmon farms. Sounds very interesting. We'll take a look.